Good evening, everybody. I'm Pierre Roberge, the daily trader. It is February 18th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I am not a financial advisor, so please do your own research and make your own decisions. Tesla down again today, so we are down $19.37. That's 2.21%. Close at 856.98. Post market, we are even Steven. Let's look at what we have here on the chart. Red candle also today came down pretty low. We went as low as 837 and we came back up to 856.98. 856.98. Does that ring a bell? Almost, because we have support at 857.36. So pretty close. So we have a wick outside of the double support. 857.36 is the upper one and 852 is the lower one, because sometimes we go down to 852 like on February 11th, February 14th, and also on January 24th. So I like to have those two lines because sometimes we stop on the upper line, sometimes we stop on the lower line. Yeah, so the congestion zone is getting bigger because we were between 879 and 940, and now we seem to be between 852 and 940. Let's go see the 1 hour chart. So on the 1 hour chart, the first hour of the day, well, we opened up a little bit higher, then went straight down. Second hour was also down. Third hour was pretty much sideways. Fourth hour was down, but then things picked back up. So the fifth hour, nice green candle. Then we basically remained sideways for the last 2 hours. All of the indicators, even on the 1 hour chart, everything is bearish. Everything is bearish. Let's go back to the daily chart. So in terms of indicator, we still have MACD that's crossover bullish, but nothing else is crossover bullish. So basically, yeah, same old. There's a lot of volatility in the market. What can I say? So we have the 10-year bond yield that's coming down a little bit. So this is supposed to help the stock market. Same for the 2-year bond. The VIX is increasing. The VIX is increasing, showing that there's volatility in the market. People are scared. So this is not boding well. So it's getting quite high, and we can apply the same trend lines as we are on the stock market. This is getting pretty high. We are close to 30. And if you remember what happened in March 2020, this COVID crash, look at the VIX at that point. The VIX went super crazy at that point. Same in 2018. Also the same thing in 2008. Remember what happened in 2008. So we are not quite, in terms of the VIX, we are not quite at the level as we were in March of 2020, but we are not super low also. Let's look briefly at Dow Jones. So Dow Jones going down also. So we could not break this downward resistance. The stock is really getting down to 33,000, as we have discussed. S&P, same thing. NASDAQ Composite, same thing again. And NASDAQ 100, we are even breaking 14,077. So I think we are going to have to do a double resistance kind of thing also here. So I think I'm going to do it right here. Let me give you this other number. So that's 13,901. 13,901. So we might have reached the floor, and that might be the positive thing here. So we might have reached the floor. Before we start going back up again, then we are going to need to have stochastic over 60, but maybe there is a floor that has been reached. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. That will encourage me. You can also click on my TradingView affiliate link if you want to use TradingView and save some money doing it. I'm going to wish you a great evening and a great weekend. We are going to talk on Tuesday because it's President's Day on Monday. And if you are a member, we are doing a live on Sunday. So thank you and à la prochaine.